Pause for a second. Imagine you're 25. It's the middle of the afternoon. You're not at work. You're sitting in your car staring at your banking app. Your student loan payment hits tomorrow. Your account balance looks fragile. You did what everyone said. You studied hard. You got the degree. You got the job. So why does it still feel like you're financially suffocating? Here's the uncomfortable truth. For millions of people, this outcome wasn't an accident. It was predictable. And today, we're going to break down exactly how that happens and what you need to understand before you sign away 4 years and 6 figures of your life. Let's talk about someone we'll call Maya. Maya graduated with a business degree. Total cost? About $90,000 after scholarships and loans. She lands a good job, making $55,000 a year. Her parents are proud. Instagram says she made it. But here's the part nobody posts. After taxes, her take-home pay is roughly $3,500 per month. Her student loan payment? $750. Rent? $1,200. Transportation, insurance, fuel? $500. Groceries, phone, internet, utilities? Another $700. That leaves her with around $350 to $400 for everything else. Savings, emergencies, medical bills, a social life, retirement. That's not wealth building. That's survival. And Maya didn't fail. She followed the script exactly as it was written. So the real question isn't, why is she struggling? The real question is, was the script flawed from the beginning? From childhood, most of us hear a single message repeated like a mantra. Go to college, it's the safest path. It's presented as a universal upgrade. Degree equals higher income. Higher income equals better life. But averages hide dangerous details. Yes, statistically, degree holders tend to earn more over a lifetime, but that statistic blends. The engineering graduate earning $90,000 out of school, the computer science major landing a $120,000 tech job, the liberal arts graduate making $38,000, the communications major working retail. When you mix extreme highs and moderate lows, the average looks impressive. But individuals don't live in averages. They live in outcomes. And outcomes vary wildly by major, school, debt load, location, job market timing. A $30,000 engineering degree from an affordable public university, that can be a strong financial move. A $220,000 degree in a low-paying field from a private institution, that can delay wealth building by decades. Same system, completely different outcomes. There's also opportunity cost. If someone starts working at 18 earning $30,000 per year and increases their income gradually, they could earn over $120,000 during the 4 years someone else is in school. Now imagine investing even part of that money. Compound growth over 20 years can turn early earnings into serious capital. Meanwhile, the graduate starts 4 years later with debt, with mandatory monthly payments. Time is money, literally. Every year of compounding lost in your early 20s matters enormously. Let's say a degree increases your salary by $15,000 per year compared to not having one. Sounds great, but if your loan payments are $9,000 to $12,000 per year, the income advantage nearly disappears. And that's before taxes, interest, inflation, lifestyle expenses. It's like running faster on a treadmill that's tilted uphill. You're moving, but you're not getting ahead. Why costs keep rising? Here's something most people don't question. If college is so expensive, why don't prices come down? In most industries, when prices rise too high, demand falls. But education doesn't follow normal market rules. Why? Because loans are widely available. When students can borrow large amounts with long repayment terms, institutions don't feel pricing pressure the same way other businesses do. Add to that, expanding administrative departments, expensive campus facilities, competitive marketing, construction projects, rising operational costs. And the result is tuition climbing faster than wages. The risk, it's transferred to the student. The institution gets paid up front, the graduate carries the long-term burden. Another issue rarely discussed openly, many graduates don't work in jobs that require their degree. Some do and thrive. Others accept roles that don't require a bachelor's degree, pay modest wages, offer limited upward mobility. And here's the long-term impact. When early career earnings are suppressed, it delays investing, homeownership, entrepreneurship, financial security. The first 10 years of your career shape the next 30. Debt can quietly dictate your choices. You can't quit a toxic job. You can't take a lower paying opportunity with higher upside. You avoid risk. Debt doesn't just cost money, it reduces freedom. Now let's add a pattern interrupt. College is not useless, but it is not universal. There are careers where degrees are non-negotiable. Medicine, law, engineering in many cases, academia. But outside those fields, the landscape is shifting. We now have skilled trades with strong income potential, apprenticeships where you earn while learning, technical certifications, boot camps, remote freelance opportunities, entrepreneurship. Some certifications cost a few hundred to a few $1,000s. Some trades can produce six-figure incomes after experience. Some skills can be monetized online without formal credentials. The modern economy increasingly rewards demonstrated skill, results, portfolios, experience, not just framed paper. Here's the part nobody wants to say out loud. Many students don't choose college purely based on financial analysis. They choose it because it's expected. It feels safe. It signals intelligence. It avoids judgment. There's social pressure baked into the decision. Questioning the path can feel like questioning your own potential. But financial decisions should be data-driven, not emotion-driven. And at 17 or 18, most people don't have the life experience to evaluate six-figure decisions rationally. That doesn't make them foolish. It means they were never taught to analyze risk properly. If you're considering college or advising someone who is, here's how to think strategically. Run the real ROI calculation. Ask, what is the total cost? Tuition plus living expenses plus interest? What is the average starting salary for this major at this school? What percentage of graduates get jobs in field? What is the average debt at graduation? What will monthly payments look like? If payments consume more than 15 to 20% of your expected take-home pay, that's a red flag. Compare alternatives honestly. Before committing, compare trade programs, certifications, community college plus transfer pathways, starting work immediately and upskilling. Don't compare prestige, compare numbers. Minimize debt aggressively. If college makes sense for your path, choose affordable institutions. Avoid private debt if possible. Live below your means. Work part-time if realistic. Apply aggressively for scholarships. Your goal isn't just graduation, it's freedom after graduation. Treat college as an investment, not an experience purchase. If you're borrowing money, this is not a find yourself experiment. It's capital allocation. That doesn't mean you can't enjoy it, but the financial framework must come first. Build income skills early. Regardless of your path, learn sales, learn communication, learn digital skills, learn financial literacy, understand investing. The degree might open a door, but skills create leverage. Let me leave you with this. The most expensive decisions in your life won't feel dramatic when you make them. They'll feel normal. Signing loan documents in a quiet office, clicking accept online, choosing a major because it sounds practical. No fireworks, no alarms, just a signature. And then years later, you're sitting in your car doing mental math, wondering why adulthood feels heavier than promised. Education can be powerful, but only when the numbers make sense. Before you commit 4 years and 6 figures, pause, zoom out, run the math. Because the goal isn't just graduation. The goal is to build a life where your income builds freedom, not payments. And that decision, it starts long before the first class ever does.